Good morning, everyone. Welcome to our panel, Fundamental and Opportunity of RWA Token. It's my pleasure to get for this important discussion today. Tokenization of real-world asset, or RWA, is fundamentally transforming from trading, custodian, and settlement, removing many inefficiencies from the existing market. Today, we are going to explore this meaning in practice, from the benefit to the future opportunities. All right, let's dive in right now. The first question is for everyone on the panel. The promise of a tokenization involves, but let's start with the fundamental. The first question is, what benefit does tokenization bring in terms of liquidity and investor access compared to traditional financial product? Rajiv, perhaps you start first.
Yeah. So just now we were talking about how financial inclusion, I think, is a driving factor. So I think over the last at least 15 years, if you just look around the way the world has evolved, I think we now have to think about the next stage of financial inclusion. Financial inclusion is having access. And I think we are more or less everywhere around Southeast Asia, around South Asia, achieved some objectives of financial inclusion. So more or less everybody has access to a formal banking system thanks to all the fintech revolution that has happened. The next stage, I believe, in this is to start to think about financial well-being. So inclusion to well-being. And I think that asset tokenization has a significant role in playing that step up, right? In enabling that step up from inclusion to well-being. And well-being is about getting appropriate advice that is suited for your conditions and context. And it is not about just subscribing to an advice that is generated for everyone. And asset tokenization through A, fractionalized access to assets, and B, allowing even on the risk side, right? I can't bet $250,000 on an accredited investment product that might give me better returns, but I definitely can go in and subscribe to a $5,000 product. And I think tokenization is about enabling that choice. And a collection of these choices will basically give us a path to financial inclusion. That's what I think is the big promise now of asset tokenization.
Yeah, I think speaking of financial inclusions, probably the best working example right now is the stablecoin, which also are a form of RWA. What we're seeing is people think stablecoin is probably one of the medium of global transfer payment remittance. But from an exchange perspective, I think is stablecoin do give another benefit is what we call the dollar access. So you can access US dollar. It's not exactly very easy for some of the countries that we work on. For example, like LATAM countries, for example, which have capital restriction for the local currency. So we can see that a lot of our users are using stablecoin for accessing the dollar and the benefits under it. So we can foresee that having some of the access being tokenized do give access globally, and at the same time having access liquidity in a global scale.
I fully agree with what Rajiv and Nix have said. It's just incredible the amount of liquidity and that you can have with instant settlement through stablecoins, the inclusion aspect of RWA tokenization. I'm also very interested in the next layer of liquidity when you tokenize your asset and then you can use it as part of collateral to obtain some credit line to further trade. And that increases the velocity of money and the amount of liquidity you can inject in the financial system.
Just to add on to all the esteemed speakers' points, I think the promise of the technology is so great, right? The idea of fractionalization, about breaking up large chunky parts of a deal into smaller ticket sizes, is something that's really interesting when you talk from an inclusion angle. I think the idea of the technology that's decentralized allows access to it in a more free way, where it may or may not have to go through a centralized exchange for trading and settlement. And the whole idea that the technology allows atomic settlement brings about this whole possibility that you take away delivery risk or counterparty risk altogether. So I think the technology as a whole has quite a bit to solve for. And of course, obviously, where we are in the industry and where the market is whether or not the likes of regulations and or the underlying policies and or also the participants in play, how do we come together to solve these things together? So I think that's one whole bit about inclusion that really speaks to us. Yeah.
Thank you very much. So basically, it's the liquidity and the blockchain block bring the efficiency for the financial market. Okay, so now we are going to dive into the question for everyone of the panel. So the key question actually is any of the new ecosystem is about capital flow. Simply put that, where is the money come from? So this question is for Rajiv. Yeah.
All right, so we all do all these things there has to be commercial sustainability, right? So be it inclusion, be it well-being and financial well-being. I think the opportunity is primarily there. So what spectrum is the money in? And what is it that today's existing system is sustainable? We have profitable firms. We have a lot of clients that are happy with what is out there today. So for commercial sustainability, where does the ecosystem need to travel to? I think there are fundamentally two things that are currently happening, which is very interesting, and make the path to commercial sustainability clearer, right? So always relative clarity. One is, of course, right, stable coins are giving you access to money, and you can hold it, and that primarily gives you access to money 24/7. Right? You no longer need an institution. A stable coin is almost a digital representation of money in your wallet. It's like a note in your physical wallet. You can access it whenever you want. Then primarily you mean that you should be able to switch it into a product that yields. Right? So today, if you're a retail investor or you hold money, there's no product out there in the market that gives you yield by the hour or promises you an entitlement to a yield by the day, right? So you've got to be very sophisticated investors to go out and do an overnight repo. There are minimum quantities available. The opportunities to make money in this ecosystem is today's financial services is great at doing, on a relative basis, high value, low volume transactions. All of the money is sort of made in that spectrum. But there is a significant amount of commercial opportunity that is actually enabled by efficiency to go to the other end of the spectrum, which is low value but high volume transactions. How can you basically do, today a bank typically does maybe, if you're lucky, right, 10,000 overnight repo transactions with a certain amount of quantity. How can you actually do 15 million of them using and the infrastructure, I believe, is there. There are two things now. You have to basically get comfortable with the fact that there is an on-chain asset that is backed by an off-chain asset. Stable coins are introducing that comfort and familiarity, especially as the regulation kicks in. And I think the next logical steps would be, yes, I will be comfortable with an equity represented on-chain by locking it off-chain. Could be Apple, anything, right? So, so that's primarily where I think the money is, by enabling access to investors and the normal public to a low value but high volume. Right? That means I can go in and go out, or I don't mind locking in. And as Eddie was saying, then The comfort that I can actually raise money against my investments on chain, against earmarking them, also allows me to stay in investment for longer. So access faster, switch faster, certainly low duration yield possibilities, and of course, quality financial advice that is customized. That's primarily where the money is.
Thank you very much. That is very insightful. Okay, ID. Okay, I have a question for you also. Metacom has been very active in this space, particularly with stablecoin settlement and RWA tokenization. So from your experience building this system, what are the practical questions about bridging traditional and digital finance that the industry often overlook?
So when I found out about blockchain, I was amazed, and the ability to transact without intermediary, instant settlement, transparency on the network, it's all great. But one of the things that we must remember is that in order to scale, paradoxically, RWA tokenization needs centralization. We need this layer of infrastructure, regulatory infrastructure, to ensure that AML and KYC requirements are met. We need to have custody. The previous panels have talked about it. Hester Pierce has mentioned it as well. It's very important that we build this new era based on solid foundations that regulators have built throughout the years. The second thing that came to my mind is the fact that, again, we think that tokenization is a technical revolution because it allows everything to be on the blockchain. Before that actually happens, it takes a tremendous amount of work to actually model the product, to understand what you're dealing with. And again, Commissioner Hester Pierce mentioned it before. Investors have to know what they invest in. Is it a digital twin, a perfect representation of the underlying asset, or is it a swap of the underlying asset? And you need to understand what are the rights that are attached to the token. It's very, very important. So it's not just going out there and tokenizing everything. It's about understanding the product, modeling it properly, and making it transparent to investors.
Yeah, blockchain does not solve for client suitability, as Eddie was saying. It is there. It has to be there. It is a fiduciary responsibility. And that's of prime importance. You are offering a suitable product at a smaller chunk.
Maybe I just want to add on to some of the points raised by Eddie. Really, quite often, technology is the last problem to solve for. The technology offers so much opportunities, but I think it's where some of the real-life problems that we have yet to get across. So maybe I just prove in point to you share what Eddie has just shared. At DBS, we've been always looking at real-world asset tokenization, and a couple of deals in the pipeline where we look at private equity, and often the biggest amount of work happens in the whole due diligence of not just the asset manager, but also whereabouts the scripts will be held and custodized at. We do duty on the global custodians and the sub-custodians as well, and it becomes a whole legal and regulatory deep dive into situations to find out what happens if there's a corporate action. What do our investors get, what our investors don't get, and what happens if there's a default, and what do these tokens really represent? Because the tokens is a token, and everything is fine until something happens. And so that's, I think, where our minds are at when we look at these deals. Be it private equity, private debt, I think that's where a lot of the focus has been. Then the idea of liquidity comes into play, right? And so after you tokenize it, where do you arrange for secondary market liquidity? And where do you get parity in legal jurisdictions across different exchanges? And then the whole idea of, the price of execution, like, now you have liquidity, but how wide is your bid ask? And how easy is it for our customers to settle? And obviously, the whole custodian piece comes into play, whether or not we have got similar tech stacks or similar, or the token is minted on similar chains. So quite often, the whole journey has got quite a bit of options or deviations in the whole journey. But I think that's where the excitement is, and that's where I think as an industry, we all come together to say, what are some of these things we need to fix? What are some of these things that regulators need to provide clarity? And what as an industry can we focus on? So the idea of cross-listing or cross-exchanges have been always top of mind for us in DBS. Yeah.
The diver always sees the detail of execution. Okay, Lenny, I have a question for you. As a major digital asset platform, OKX deal with significant operation and security challenge. So how does OKX deal with such as custodian, smart contract risk in the tokenization market?
Oh, I think as an exchange platform, we deal with this risk for like 13 years. So I think this is a really big question. But I think in short is, if you're talking about custody, which also means that OKX already serve as a role as a digital custody for millions of customers in the world. So in order to, that's what we explain to our regulator as well, is how our wallets are going to be designed to make sure it's safe, but at the same time that we need to serve global customers. Just give an example as, for example, we are also regulated in MENA region, in Dubai, for example. So what happened if the token is physically set in wallet infrastructure that's domiciled in Singapore? What happened? What control? What access? What kind of security measurements if the physical code is custody in Singapore for the users in Dubai, for example? So yeah, obviously we would have a different kind of procedure, but the most important one, we need to make sure that we have super administrations domiciled in Dubai, which have the capability to have kill switch of any other security measurements to have a claim of the ownerships for the physical token that's situated in Singapore wallet infrastructure, for example. And in futures, this kind of infrastructure, this kind of custody structure is going to be decentralized and operated in global scale. Yeah, just a little bit add on the smart contract risk, is we already have a smart contract audit team internally to audit every single token, every single smart contract for everything we list, and have full security report internally, and we work with external audit partners as well to collaborate and see we can match experience. Most importantly, we have real-time red flag system to make sure that the smart contract is operate as it's functional. If there's anything changes in smart contract level, there will be a warnings across the board, across the whole senior company in real time.
Thank you. David, let's turn to you the last question. So you have a great vantage point on the market appetite. So could you tell us more about the interest that you are seeing around the digital asset and tokenization, and how this different for different type of investors?
Yeah, so the exchange has been, part of the bank, we're the first bank-backed exchange, and we've been around for the last 5 years. And maybe I will break down the question in 2 parts. So one, really our corporate customers, and the other will be the ultra high net worth individuals and also the family offices. So I think on the corporate side, since a couple of months back, we've been getting quite a bit of demand. And within the corporate bits, I will maybe split into TradFi players and natives. And so on the TradFi side, ever since the US came out with and passed the Genius Act into legislation, we've been getting quite a bit of interest on stable coins, is what Rajiv spoke about just now. And these corporates are coming up to us and say, look, how do we receive this coin? How do we process it safely? How do we manage the keys? How do we transfer it to fiat? And a lot of these discussions are now beginning to drift into the real world use cases of payments and receivables of traditional companies that have historically not been the digital asset space. So I think that's something that's, I think, positive for the industry, If you look at the stablecoin market cap, it's close to 300 billion today, and that's more than 10% of US M2 supply. So they are being material, they're starting to be material in the whole landscape of dollar supply in the world. And obviously everybody is looking at seeing whether this continues to take off. There's going to be a little bit more certainty in how the regulators enforce custodial requirements around reserve banking. And that in part will stir the whole utilization or use cases for stablecoins. And that's where, as an exchange that's part of the bank, you know, we serve that need. And, you know, we see stablecoin just like any other FX pair. How do you move into fiat? So that's really on the corporate side. And if you look at corporate natives, we have been around for 5 years, and, you know, we started the whole onboarding of natives in a big way. We were one of the first believers in the whole industry. And, you know, these folks have got a slightly different problem to solve for. A large part of their balance sheet happens on-chain, and because they keep a lot of on-chain balance sheets that may or may not give you, the whole idea of tokenized money market fund now becomes a game changer. And so we announced a recent partnership with Franklin Templeton on the Singapore Benji token. And this is in part because our customers, our native customers, have come up to say, look, how can I move my balance sheet onto a tokenized money market fund, get some yield, but still use these tokens as some form of collateral or risk management, or, you know, escrow needs, as they would with any other TradFi instrument. So that, again, in itself is a positive move for the industry. And I think that's something that, as a bank that supports our corporate customers, both natives and TradFi, we continue to do. On the individual side, which is the ultra-high net worth and the family office space, our customers have always looked at digital assets. And I think how they're different from other investors is the whole yield expectation or return expectation is really, really different. And it's obviously a high-risk asset, and we keep reminding them this is a high-risk asset. So I think their needs are about how do you, give me a safe market access to this asset class? How do you do your trade settlements? How do you do your custody, liquidity? So all of these questions are in play. And when we look at RWA, where we are looking to do real-world tokenization assets, I think the customers that we see are increasingly very sophisticated. They will ask about the underlying structure. How is the underlying structure tokenized? Where the legal recourses are, and quite often a lot of the work goes into external opinions with lawyers to do due diligence in this space. So I think, as a whole, our customers are, as a bank, been very interested in the asset class, and we stand ready to support them in this journey to provide them a safe and regulated way to interact with these products. Yeah, thank you.
Okay, thank you. So we do have a Q&A question for the audience. So before I ask the last final two questions, there is a QR code that actually y'all can scan to ask the question. So please do that if you have any question. So I also combine the two questions to one question, is the trust and leadership. Because in wealth management and asset management, the trust is always very important. So I would like to ask that, from your opinion, that for the digital world, for the RWA world, how this trust actually can play the role? Also, the next question is the same question to the MAS. What do you see as Singapore in 2030, where we are? So feel free to answer the question.
So one thing that I always think is the term that we use as real world asset tokenization is probably somewhat misleading, right? So there's no fake world asset tokenization, for example, right? So what we're trying to do is off-chain assets are being represented on-chain. Sort of tokenization is a bridge that actually improves off-chain assets access on-chain, right? Increases liquidity, increases access. More importantly, I think increases the minimum size at which you can probably own with lower overheads. And the trust then, where does it come from? If you look at it, right, how does a brand gain trust? How does tokenization gain trust? You need engagement. And that engagement needs to deliver your expectations. And that's primarily the cornerstone for trust. Why do you trust Grab or why do you trust Amazon? They're only 15, 20, 25 years, right? So they are equally competing with brands like HSBC and DBS that have been there for over 100 years. What they have done for a segment of clients is the clients repeatedly engage and get what they need. The other cornerstone is ability to deliver value at the moment of demand. And that's something that tokenization is built for. You can easily deliver value where there is demand. If you're able to, again, match expectations and do it in the low value but high volume segment, that basically allows you to transact more frequently. And this is primarily where you will get trust. I think the legal frameworks and regulatory frameworks are the enablers there, and I think Singapore is doing a great job. Is there more that can be done? The point is when the customers catch up, that will force everybody to sort of provide more clarity. So it's going to be a virtuous cycle, I think, for the next 3 to 5 years, with the world's largest economy basically providing comfort and clarity to large institutional investors. So there is a reason why economies like Hong Kong or Singapore will be fast followers, because we don't have the size of the economy to set a trend, to influence the globe, right? But we can easily latch on to bigger trends and we can fast follow and improve and iterate. I do think these are the strengths that we have locally here. And we will be always, I think Singapore will be in the always top 3 in the world, right? So, sometimes 1, sometimes 2, and sometimes we go back to 1 again. But that's primarily what I think as an open economy, you're destined to do. Thank you.
Yeah, I agree with the trust point, which deliver as promised per se. So basically, if you're an exchange, you have to play a medium role to facilitate trading and don't do anything else. If you're custody, focus your business on custody, focus your security and business model and protecting customer access. For the second question, what happened 5 years next, especially for RWA, I would expect to see the on-chain world and the off-chain world. We have something in between. We have some bridging access in between. For example, like the equity swap-based token, or in the other side is for the wallet. Some of the wallets going to be having verified wallet addresses, and some of the addresses going to be KYC. So these two worlds are going to commingle and merge together by having some kind of ecosystem in between. So I would expect to see, in terms of Web3 wallet addresses, there's going to be 2 ecosystems. One is totally unverified addresses. The other one is totally fully compliance verified addresses, which have very different access of product and offering to the on-chain, off-chain world. So for the RWA specifically, they probably able to serve and only able to offer service to only exclusively to verify address in some of the jurisdiction. That's something that we foresee.
Yeah, I absolutely agree with what Rajiv and Linux said. For me and for us at Metacom, the future is not full Web3. It's not sticking to the past. It's going to be somewhere in the middle, a hybrid ecosystem where you leverage on what blockchain can do, but you have the safeguards in centralized institutions, regulated institutions, to make sure that investors are protected. What I would love to see is the same way that we have stocks that are listed and we can consult which stock can be traded. Can we have on-chain a list of tokenized RWA tokens that are recognized and compliant with the regulation, so that investors can trade and buy, subscribe with confidence, where I can buy from HSBC and I can redeem with DBS, for example. That would be a form of decentralization, decentralized clearing in a way. And I think that makes it very, very powerful. So I would love to see that kind of initiative where you can see on-chain what is safe to invest in.
I think the idea of trust plays to a strength of a bank. And that's where I think as banks, we have been selling trust for centuries. So the idea that trust is not just about, I mean, the exchange started with a very purposeful bifurcation between customer assets and bank assets. So we were always right from the get-go clear that counterparties who trade on the exchange should take the bank's risk, not the exchange's risk. So that's some of the early thought leaderships that when we did this business 5 years ago, we actually started up. So it's not just counterparty risk, but we also look at the technology risk as well. So how do we safeguard and safekeep our customers' digital assets and their private keys? And also, how do we help them navigate this whole idea of coins being in tainted nexuses and wallet addresses? So I think when we look at trust as a whole, I think that's very much our DNA. And I think as a bank, when we look at these opportunities, we unpeel all the different layers of risks that exist. Yeah.
Okay, thank you. So since that we are short of time, there's a few questions actually come in. Since all of us is from traditional finance background, there's one question that actually I want to ask, but just take short. So they're asking about AML. So it means like, how do you see the risk such as AML in the tokenization world? That what more need to be done? It's from our audience.
Yeah, maybe I'll take the first cut. I think the controls that we have in place for fiat and the controls that we have for digital assets are, at least where in DBS is a little bit different. The controls that we have for digital assets is a lot more than we have for fiat. And that's because the basis of the technology allows you to do KYT on the transactions, and it helps you see all the way from origination to when it hits your wallet, which wallets it has been, what are the nexuses that have been associated with. And so that's one thing that also, from a realization of stable coins and acceptable stable payment currencies is something where we're focused on. This whole idea of travel rule compliance and first-party transfers. So I think Lennox spoke a bit about it when he alluded that wallets itself are not KYC. The idea is that you can create a wallet address, an unhosted wallet address with minimal information. And I think that as a bank is something that we have to deal with. And so there are several ways that we're doing this. We always look at this in a closed-loop ecosystem. How do we ensure customers are receiving coins from wallet addresses that we're comfortable with, and etc. But it's something that the industry needs to solve for. And there are things, and we are aware. I mean, like we've been speaking to IMDA and some of the government bodies. There's some effort in this realm, in this part of the world, to do some level of association of known wallet addresses to known silos of government-held data. So that's something that we're part of. But I think on a global scale, this needs to be solved for as well. So the idea of reciprocity in identity is going to be something that collectively we have to solve for. Yeah.
Yeah, just add, we have some real-life experience. So in short, if we talk about tokenized securities or tokenized money market funds, currently is really operated in very restricted access. So probably whoever want to buy or sell these kind of tokenized access, you need to be either carry a security license, D license, or got a full KYC in order to get access. So if you speak widely about the RWA related to stablecoin, so which right now that I think a lot of participants already implemented travel rule, real-time on-chain analysis and surveillance. So if you have illicit funding in between, people can track you, the exchange can track you, and also last but not least that the blockchain itself and the issue itself have the capability today to freeze addresses once they receive call directly from the enforcement agent. So blockchain itself is actually pretty good tools for AML, if you ask me.
Yeah, I fully agree with Lennox and David, and I think as we progress and as the space is more saturated with regulated entities, it will be even more powerful to share that kind of information, to identify where the funds are coming from, and to protect our investors. I can only see it getting even stronger from here.
Last one is, there's going to be a much more predictable path of how the assets move. You can randomize, but you can also recognize that, right? So, so tracking is easier. And the fact you have to also look into is the fact that this stack is built on modern technology, which basically gives you better tools. There's always going to be a cat and mouse, right? So you should, that is the element. But I believe that it will be easier, not harder, compared to the traditional rails.
Okay, thank you. So it's obviously the RWA token is not just a concept. It's really from the move from the theory to our real world. So please join me to give a huge thank you to our incredible panelists. Okay, enjoy the rest of the session.